We're running about 35,000 net new jobs a year right now. Northern Virginia has received about 55% of those jobs. So it's a strong regional economy, and Northern Virginia is the epicenter. And we've looked at how the job growth patterns are going to play out over the next 5 years. And while we may not grow as fast as we have in the past, we're going to continue adding jobs. The underpinning of the economy is driven by a very high quality workforce, and this is attracting businesses to move here, to take advantage of the workforce. And we've had a strong demand when we weren't generating new jobs, and it's because there's a dynamic in the economy that people don't pay attention to, and it's the people who are retiring from the workforce, and just the normal turnover in the workforce generates demand for new workers. And so in Northern Virginia, there's more than one replacement job needed for every net new job we add. So it's really a 2-to-1. And what's happened throughout even the downturn, which kept the housing market from collapsing here, was that we were attracting new people to this region to backfill vacant jobs vacated by people leaving the workforce. So we have two growth forces driving the housing market here. These newcomers tend to support the lower price housing, the under 400,000, the townhouses, and the people who had sold those houses now are trading up. Well, it certainly has become a seller's market where we probably couldn't have said that a year ago or 2 years ago, certainly. It's still a buyer's market. It isn't like it was on price, but the interest rates are just phenomenally low. We keep saying they'll never be lower, and then they go down a little bit. But when you can get 30-year fixed mortgages, as we can right now at under 4%, and 15-year mortgages at under 3%, these are numbers that are not that much higher than the rate of inflation. And so it's almost costless, especially with the tax deductions. So it's a really good time to buy, because a year from now these prices will be higher on houses, and the interest rates are expected slowly to rise, not very much, but 2 years from now they'll be higher than they are now. Buying makes a lot of sense, not for everybody. We do find increasing incidences of renters paying more for rent than they would have to pay for on a mortgage for space that would be considerably larger. But I think it's the middle range home buyer who's already here, who's going to move up, which is the next market. And they're going to free up, as they put their housing on the market, opportunity for people who are in smaller houses, less expensive houses, to move up to. The strength of the market is actually driven by the shortage of houses for sale. The market's always tight here. I think what's going to change the market for the good in the coming year will be that we will have more trade-up buyers, people who have been sitting on their middle-priced house, I'll call it middle price, in the 500,000 to 800,000, who can afford actually and want a higher price house. They've been waiting for their housing values to reestablish. We have several jurisdictions in Northern Virginia whose median price now equal to the peak in '05. So the housing prices inside the Beltway have come back to pre-recession levels, and outside the Beltway they're quickly approaching that. So it's becoming a good time for people who want to move and who want to put their house in the market to get full price.